Hello, friends. This is Vijay Bhambwani. I am a prop trader and I run a prop trading company which we incorporated in 1993. I've been in these markets since 1986 and I want to share my experience and my journey with my online family to help you trade better. Now, since the last couple of years, you've noticed when I put up a post market summary, especially on Thursday night, I add a line there. Please watch the last 60 or 75 minutes of trade on a Friday because that will impact the sentiments on the following Monday. Why is that? Why is Friday closing more important than any other day, and what it actually means for you, and why this price is something that you should study even more carefully than you think it is? This podcast is all about that. Now, as a technical analyst, you would all know that the closing price is the most important price of open, high, low, and close. This is because the closing price is a level where day traders who are weaker hands because they exit their trade book irrespective of the outcome at market close. And that indicates their conviction levels or lack of conviction levels and their intent of what they want to do. On the flip side, overnight traders who carry forward their trades irrespective of the price, displaying their conviction levels and intent. Now, these overnight traders are stronger hands, relatively speaking, because they write out checks to pay for span margins, which is the initial deposit. They also risk paying mark to market margins, exposure margins, and extreme loss or ELM margins. If the trades are still open at the closing price, which is indicated by the open interest of that particular derivative series or of market wide position limits or MWPL, which I have been telling you that this is one of the most important metrics for traders to understand. So do yourself a favor and learn all you can about MWPL. Now, so the closing price, it shows how much steam there is in the current move in either direction. Similarly, for swing traders, the closing rates of Friday are most important rates of the week because buy and hold traders show their conviction levels by the MWPL of Friday closing. Depending on where the closing of Friday is vis-a-vis the opening of the week, you can guesstimate where the opening price of the coming week will be. Admittedly, this research which I share with you online is not my original work. It is the sterling work of a world-renowned technical analyst of 5 decades ago by the name of Mr. Richard Donchin. His brilliant observation of Friday closing were pioneering work in his time. We have merely taken his work and super refined it a little bit further to get into the micro details of the closing price, especially in the last 60 or 75 minutes. Now, those of you who've been reading my post market summaries have noticed I mentioned you must either watch 60 or 75 minutes, last 75 minutes of trade. Now, the time tenure, which is 60 or 75 minutes, is a matter of internal statistical research, which I don't want to get into right now in the interest of brevity. But remain assured, how the price behaves in the final 60 or 75 minutes tells us a whole lot more than just a plain vanilla closing price which was advocated by Richard Donchin. For example, if the price is quiet all day long, near yesterday's close, and it shoots up with high volumes and MWPL expansion in the final 1 hour, is it the same as the price opening with a gap up and closing near almost the same level with little or no change in volumes and MWPL? Hell, no. Both are not the same signals for a smart and savvy market watcher like you, even though the closing price of Friday is equally higher compared to the previous session and today's open in both cases. Therefore, what we know is how we get to the closing price is as, if not more important than where we go on a closing level on a Friday. That's been the super refinement that we have added to our statistical in house trading model called the IBEX from our end. I'm sure the late Richard Donchian would have done the same in his time, but in those days, the market data was not all that easy to get and definitely not tick by tick data. Today's digital and electronic markets of the present day and age allows a rank and file trader like you and me to get this data for free or by paying a small pittance, a few pennies, if at all. In the coming years, I'm very sure younger traders will take my work forward and take this research and add their super refinements to it and make this study even more cutting edge. Remember, markets talk. They talk to traders through numerical, which is numbers data. They convey the sentiments of traders to the watchful trader as long as you care to listen to the market and the message of the markets. And Friday's closing data is something that you must listen to. Paper trade with mock trades on what happens to your favorite stock, favorite commodity, or index futures in the last 60 minutes of trade and how it impacts the next day and the next week. Don't take my word for it at face value. Check it out for yourself because the proof, as they say, of the pudding lies in its eating. And the late Mr. Richard Donchian has left us an extremely delicious mouth-watering pudding in the form of Friday closing levels. Friends, before I sign off from this podcast, a reminder to subscribe to our YouTube channel and to our free Telegram channel where I share all my research under one roof. My contact coordinates appear at the fag end of this podcast. Also in the comment segment, do let me know how you feel about our work, how it helps you become a better trader, and more importantly, if there's any other topic you want me to record our next podcast. Thank you for being with me in this podcast. Thank you for your patience. Till we meet again in my next. This is Vijay Bhambwani signing off for now. Do have a very profitable day ahead. Take care. Bye-bye.